Well, welcome everybody to this week's ATL Home and Market podcast. Glad to see everybody this week. We've got a really good program this week because it really centers on some things that are critical for you when you want to buy and sell a house, and some pretty sharp people who are going to tell you about it. I'm Ira Miskin. I'm broker and team leader for Your Home Sold Guaranteed Realty and also the Miskin team, along with Stephanie Miskin, who is co-team leader for the Miskin team. And our guests this week are two really super experienced folks that work on the loan side of our business. Brett Turner and Jackson Booth, both of whom are senior loan officers who've been doing loans for a great many years. And they work with our lender partner, AnnieMac Home Mortgages. And they have a whole group of amazing programs and a wonderful system for how they work with people to help you guys get through what sometimes for folks is one of the scariest parts of the whole buy or sell transaction, which is the money. So we're going to dive into that in a few minutes. But before we do, since I'm looking out the window here and the weather's clear and it looks like it's going to be a fairly decent weekend, Steph has some pretty cool things for you to know about to let you get out there and have a good time while you're thinking about spending hundreds of thousands of dollars on a house. Steph, give a shot. What do you got this week?
Okay, so one of the best times in Atlanta is in the spring, and so that's where we are now. It's not too hot, it's not too cold, it's great out. I'm going to give you an overview of a whole bunch of things that are going on this week, next week, into the end of the month, so that you kind of put this stuff on your calendar. I want to spread it out so it hits different parts of the city and the metropolitan area. So the first thing we're going to talk about is this weekend. And here in Marietta, we have the Marietta Greek Festival. That is May the 15th to the 17th. And that's at Holy Transfiguration Greek Orthodox Church in Marietta. It's lots of fun, great music, great food, dancing. It's a fun thing to do. Another thing that's going on in Kennesaw this weekend is at Swift Cantrell Park, which is a beautiful big park in Kennesaw. They're going to have basically a movie on the green. It's free. The movie is going to be Atlantis, the Lost Empire. There's going to be all kinds of family fun things to do. There's going to be food and vendors. So that's going to start at 6 o'clock on May 16th. And that's just this weekend. The following weekend, we got Memorial Day. A bunch of stuff's going on Memorial Day, so I'm going to like kind of bullet point it for you. It's all over the city. In the city itself, at Piedmont Park, from the 23rd to the 25th, we have the Atlanta Jazz Festival, and that is free and open to the public. Great music. Also in Atlanta is the Caribbean Festival, Caribbean Carnival, they're calling it. And that's culture, food, music. Again, it is May the 23rd. It is in Atlanta in Rodney Cook Park. Also, downtown Atlanta at the Georgia World Congress Center. This has been going on forever and ever. And it's MomoCon. And it's, anime, games, comics. People dress up as characters. It's great for families and teens. And that's going on at the Georgia World Congress Center. There also is an Asian festival going on, and that's going to be in Gwinnett, the Gwinnett County Fairgrounds. So that's a 4-day Asian culture, food, everything you can possibly imagine, dance, lots of fun stuff going on. Throughout the month of May, through May the 31st in Fairburn, if you have never done it, you should do it. There's the Georgia Renaissance Festival. So that's great fun to go to, and that's going to be running through the 31st. Now, if you decide, I want to get out of town because I got a couple of days off, there's a couple of places that you can get to that are not far away. You can hike up to the mountains, go to either Blue Ridge or Helen, get a nice cabin. There's great downtown shopping in Helen. There's tubing and waterfalls to explore, and it's a Bavarian village. That's what Helen is. Another place you can go to is Chattanooga. Chattanooga is not that far from Atlanta, and there's lots of fun stuff to do up there. There's the aquarium, there's restaurants, there's the riverfront, there's Lookout Mountain. So if you've never been to Chattanooga, that's another place. So, and if you really want to go a little further and you want to get to the beach, you can get to the beach. You can go to Savannah, but that's going to take you 4 to 5 hours to get there. These other places only take you about 2 hours. So, that's a quick look about what's going on in Metro Atlanta. And if you wanted to venture a little further out, do it. So anyway, that's what I got.
It's the great part about living in the Southeast is that you're really not limited to choices. I mean, not that far to go to the ocean, not that far to go to the mountains. And pretty much anywhere you look throughout Metro Atlanta on a week-to-week basis, and particularly for holidays, just lots of great festivals that have been going on for years. And so they really are, they're really populated well, and they've got great events, great things to do. And mostly, which is what I like, all kinds of different foods. And if you go to the Greek festival,
Great food.
Great food and great drinking. There you go, even though it's a church. So before we go out to the Greek festival and we all get drunk, the thought of what do I need to do and how do I need to do it and who do I need to do it with, because I need money to buy my house, is especially for first-time home buyers, but even for buyers who are moving up to a bigger house or they're downsizing. These are in these times difficult things to think about, and they have difficult decisions to make. But Brent and Jackson, both of you guys have been doing this for a good long time. And so you have a really good feeling for both the personal concerns that prospects and clients have when it comes to getting money to buy a loan. And AnnieMac has a wonderful group of programs that they have developed that are really great at helping solve immediate and very specific problems that buyers come in with. They think they're unique when in fact they really are in a group. Can you guys just give me, and give folks at home a bit of a survey of, what is it what's your approach? How do you deal with people? And what are some of the programs and products that you have with AnnieMac that you look at? And then we're going to dive into some of them that are really interesting and really very valuable. Guys, what do you got going on, and how does that work?
I'll go ahead and start. So one of the great programs we have with AnnieMac Home Mortgage is we have a cash to keys program, which is our AnnieMac private equity department. One of the challenges buyers run into is when they're out looking for properties, you go through the pre-approval process, you get ready to go out and buy. Maybe you secured what you think is a great rate for your mortgage. And you might be looking for a while, shopping around, and then you find the one. You find the perfect property. It's got the right address. It's in the right school zone. Checks all the boxes of everything that you're looking for. That's only part of the issue, is finding the house that you want to buy. But there's another issue that can come up, that if you find the perfect home, there may be other people in the market that are also looking for that same property, and you might go into a competitive situation where you're not the only one placing a bid on the house. So we call that, or I like to call that, the contingency trap, where you're going into an offer situation. You might be competing against cash buyers. You might be competing against other buyers that have financing. And if you're putting an offer together where you have multiple contingencies, you have a financing contingency, meaning that you need to get your financing approved. You have an appraisal contingency where you've got to make sure that the house appraises, or maybe you have an existing home that you need to sell first. That's a home sale contingency. Those are what we call contingency traps, where you may not get selected by the sellers as the winning offer because they're like, hey, we don't know that this is a sure thing. We might have a cash offer on the table that's lower than what your offer is, but we feel that that's more sure. So one of the things that we can do with our cash to keys program is we can eliminate the contingencies that you have. When it comes to buying a house, we have a buy now, sell later program. So if you have an existing house to sell, we can actually help you buy your new property with no contingencies. You buy the new house first. We'll help buy it with our cash. You move in immediately, and then you have 6 months to sell your old property. If you are using financing, we have a cash offer platform, which eliminates the financing contingency. The way that we do that is AnnieMac will come in and basically boost your pre-approval to a cash-backed offer, and then we're guaranteeing to the seller that on that closing date, that whether we use your financing, which is what we do 90% of the time, or if AnnieMac has to step in and purchase the home, that we will guarantee that closing date and the sale of their home, and that takes care of the financing contingency. And lastly, another concern is, sellers are concerned, is my house going to appraise for the purchase price? We know we want to list it, we want to sell at this price, but the house has to appraise. And so one way we eliminate that contingency is we have a program called appraisal assurance. And so we can run a valuation on that property and issue an appraisal assurance certificate guaranteeing the appraised value. So what we do for our borrowers is when they go in to put an offer to win that bid, we can eliminate a home sale contingency for them. We can eliminate a financing contingency, and we can even eliminate an appraisal contingency. And all these things basically make you a power buyer in the market, and we help you compete and win. So if you find that dream home, it's going to, propel you to the top of the list of those offers and help you win. So you're not having to spend weeks and months looking for a property and having bid after bid fall through because your offer just isn't strong enough to compete in the marketplace.
And see, that's a good point. And we're going to jump in and we're going to take a little bit of a deep dive into a couple of these programs as we get further on. But one of the things, and Jackson, maybe you can tell us a bit about this. Programs are critically important, and many lenders don't have a range of programs like that to be able to problem solve. But there's the other side of we've got the goods, but how do you begin the whole process when you start working with people? How do you get them to not only do what they need to do, but get them comfortable with you and get them to start to really feel that the options that you're giving them are viable options. What's your approach to working with people to help them get started?
Great question. I think the first thing that I do is I treat everybody as if they're a first-time home buyer. So I will walk with them through the entire process and make sure that they're comfortable, that they're well communicated with, and that we have everything that we say we're going to do, we do, and that the numbers that we're going to give them, the estimate is going to be pretty close to exactly what their numbers should be.
And that's an interesting thing because I have seen all too often that initial estimate is off by sometimes thousands of dollars
Right.
at the end of the process. And then, where am I going to get the money to do this?
100%. Yep.
So-
And I tell you, I take that personal, and I think that's really important for your loan originator, your loan officer to take that personal. Here's the thing, okay? You don't have to be off thousands of dollars on your loan estimate. Okay, you have to be conservative as a loan officer, and I think Brett can speak to this as well, that we take the time to make sure that those numbers are as close as we can get them. We're pulling tax bills from last year. We're speaking with insurance agents to get a ballpark idea of what their insurance is going to be like. We try to pick a good attorney that is kind of middle of the road as far as fees are concerned. So that's kind of how we play the conservative number issue.
Right. Steph, I know you had a question about how this all gets started.
Yeah. Typically unless you've bought multiple homes, people have no concept of what you guys do, what they need to go to see you with, the information that they need. So, I always tell them, it's going to be a very intense time. Buying a house is a very intense time. You have to completely trust your realtor and you have to completely trust your lender. And we work together and we're a team, and our objective is to get you through with the least amount of hassle and the least amount of stress as possible. So when I send somebody over to you and I tell you, okay, this is their, they want to buy a 4-bedroom, 2.5 house, a bedroom house in a good school district in Marietta, Georgia, and I give you the basic information. What do you do from that point on? What do you tell them that they need? How do you set up expectations for them of what this whole process is going to be like?
Sure. That's a really good question. And I think setting proper expectations up front creates a very smooth process from the very beginning to the time they get the keys. So that's super important. And I think from there, really what I try to do is to put myself in their shoes and have a great conversation with them up front. Of course, there are days where people just want to do the application and just go from there. But there are people that want to have that initial conversation as well and kind of get to know, hey, who's Jackson? How can you help me? And how can you make this as easy on me as possible? So we go through, hey, here's what the entire process is. Here are the type of documents that I think we'll need based on the situation that you've already told me about. And then number 3, what are the expectations from your side and my side? So we go through all of that so that each person, whether it's husband, wife, or a single person or 4 or 5 people, we're going to go through that process with each of them so that they fully understand, hey, this is what the entire process is from beginning to end. And then as we're going along, they start to see, hey, this is exactly how it's supposed to go, right? So they do their application, they upload or email their documentation, and then from there, I'm going to calculate income and assets and make sure that they will fit into the specific thing that we've spoken about. And then I want to send them an estimate so that they can see kind of what those numbers look like. That's the most important thing. That's what people want to see. It's not, they don't want to hear my voice without seeing numbers, right? And
Right.
That's a super important part of giving them comfort. And I'll let them know your rate is not locked because you don't have a property yet. So we're not locking your rate. And I explained it to them that these are today's rates. These are, so if it takes you 4 months to find a house, we could be in a different rate scenario. But, I'm trying to give them confidence along the way that this can be done. Because when I look at a file, I make sure if I'm comfortable with it, they should be able to go shopping from there.
Right.
Yeah, Brett, there's a program for pre-approval. And this is always an issue. And I know real estate agents complain about this all the time. You have a listing, and an agent brings a buyer, and you say, "Okay, you guys, you've talked to a loan officer. You guys pre-approved?" And they say, "Yeah, sure." And they have a letter. Well, that letter says that they're pre-qualified, which means they had a 3-minute conversation with, a loan professional. They haven't turned in any documents, but they said, "Hey, listen, I make $200,000 a year, and I have $20,000 in the bank." And they say, "Great, we can get you a house for $430,000." And the majority of those people, even if they do put an offer in, can never qualify for a loan because there's all the things that go on in the background. Mm-hmm. You have a program, which is a wonderful program. It's called your Platinum program for pre-approval. Can you talk to us a little bit, Brett, about how that Platinum program works? Because that totally changes the way in which buyers can shop effectively for homes.
Yeah, no, 100%. And that's a great point. So you're very correct, Ira, when you say that there's different levels of quality pre-qualifications or pre-approval. So pre-qualification is the simplest form and kind of like the lowest bar, kind of qualification or approval that you can get. So that's really just, hey, your credit meets the minimum credit criteria to potentially get a loan. We haven't verified any document. We haven't necessarily run you through any underwriting, due diligence to see if you can qualify. It just looks, like you can potentially qualify. And the problem that you get into that is there's many components that go into somebody's pre-approval. It's not only their credit, it's their income. A lot of times with a pre-qualification, that is only based on what the applicant is putting on their application. So if you put down that you make $120,000 per year, but when we get your documents for loan qualification purposes, you may actually only make closer to $80,000 per year. So that pre-qualification, if it's based on the wrong information, can be very, very misleading, and it often leads to a lot of wasted time, wasted money, and heartbreak for both the buyers and real estate agents because everybody just wasted their time. So I would never go home shopping with just a pre-qualification. Then a step up from that is a pre-approval, which most lenders will do. A pre-approval is based on getting a full credit report. It's based on getting their income, asset documentation, and having a good overall view of what they can do. They're typically reviewed, and then everything is sent through underwriting. And that's just within what's called automated underwriting, where all of their input from the application is run through a software program. And then if everything checks out, it'll give you the green light, so to speak, that, hey, you qualify or pre-qualify for this loan. So you're pre-approved. We reviewed credit, income, assets. You're good to go. However, a flaw that you can have with that is, part of that is going to be based on the experience or the inexperience of the loan officer you're working with. So if you're not working with somebody that's very good at what they do, they could issue you a pre-approval letter and it's not worth the paper that it's written on. And I see that quite a bit in the industry after 16 years of experience. It happens more often than you think because loan officers are humans. Some are more experienced, less experienced, and somebody that's maybe not looking for a potential pitfall, red flag, or issue with something, or they're not familiar with a guideline. They can issue a pre-approval. They can make a mistake. You could go out, go shopping, get under contract, put an earnest money deposit down, get 3 weeks into the underwriting process, only to find out that loan is not going to close. And it was never going to close because the loan officer just did not know what they were looking for. So what we have is what we call a platinum pre-approval at AnnieMac. And so you're taking, we're collecting all of your information up front, but as you're out looking for a property, we're actually submitting everything to an underwriter, an actual mortgage underwriter, to fully review your credit, your income, do your income calculation, reviewing your assets, making sure that any red flags, any issues, that those are all dealt with up front. And so a platinum pre-approval, it's not a 100% guarantee, but it's as close to a 100% guaranteed. This loan is going to close as we can possibly get. The reason we can't do a 100% guarantee is because if there's something that comes up outside of our control or that we didn't see, maybe an issue with the appraisal, an issue with the home inspection, an issue with something on title that comes back that we didn't know about before we went under contract. Obviously, we can't control those unknown factors, but a platinum pre-approval is a fully underwritten pre-approval, and it's rock solid. So it's the absolute best kind of pre-approval, and also it's a much stronger bid on a property. So again, going back to wanting to win the bid when you place an offer on a home is making sure that if you're competing against other buyers in the marketplace, we want to kind of equip you. We want to give you the additional tools. We want to give you the secret weapons. We want to give you an unfair advantage in the marketplace by giving you the highest quality pre-approval possible. So that's just one of the options and things that we can do to help you win the bid on your dream home.
Now, you see, and that changes. It changes the way in which offers on homes are written, because a lot of times, if the home buyer has not gone through a sophisticated pre-approval process like platinum, the best estimate that you can give is it's going to take at least 14, but more likely 21 days to get through the final approval process for that loan. Because there's not only is there all of the work that has to be looked at as Brett described, look at title and look at issues related to the property, but also all of a sudden, the loan officer magically discovers, oh my goodness, you have $60,000 of school loans and you haven't paid them in 2 years.
Right.
Well, because Joe Biden told me I didn't have to pay them. Huh? Right. And so not only does that have to be fixed, but very often those are deal killers. And if the length of time that it takes for a buyer to be able to get fully approved for a loan, actually get a notice from you guys that says, yep, we're going to give you that loan, and we just have some final things to do, but you're cool and you're done, as opposed to, well, we've got these other conditions that have come up that have to be fixed. If the buyer is out of their financing contingency and there's an issue with the loan that is outside of the bounds of what the agreement is, and there are a number of them, the seller can cancel the agreement, keep the buyer's earnest money, and now you have nothing and you're out a good chunk of money. So everything related to getting the right start becomes really critical. But now you're at a point where, okay, I've put that offer in, the offer's been accepted, I've gotten platinum pre-approval, I've also worked to get my appraisal contingency approved. And so I put that offer in with a very short financing contingency and a very short appraisal contingency. But there's still, as you said, Brett, that background work that has to be done to finalize the loan. So just last piece of business of how this whole process works. What's happening with the underwriter, and what is it that you, as the loan professional that's actually managing the loan, need to do in order to make that relationship between buyer and underwriting work so that everything that's necessary is there and can be approved so that this loan can get closed?
You want me
Are you
to?
asking me or Jackson?
I'll take that one. Not
Okay.
a problem. Okay, so here's what happens. So once they find their dream home per se, and the very next step is that when we receive that binding contract, we trigger their disclosures. So meaning that that's the sixth piece of information that has to go on their application to create a legal mortgage application. So that application then allows me to send them their disclosures after we tweak the numbers based on whatever the actual purchase price ended up being. And that gives us the ability to send them the disclosures so that they can review those. Once they review and sign those, and remember, review and signing does not mean that you necessarily agree with the disclosures or that you are agreeing. It's that you are time stamping those so that we know legally that we have sent those disclosures out and they have signed them within 3 days. Okay, so from there, what happens is the loan gets prepared to go back into underwriting one more time, right? So, but what we're doing at that point is we're waiting on the title to be ordered and to come in. We're waiting on the appraisal to be done and to come back in. We're waiting on some other verifications that may come back in, like there has to be like a 10-day or a 5-day verification of employment before closing. And there's different steps there, but all of those pieces have to sort of align. We verify where your earnest money came from. If that's the case, if we have to do that. So we have to make sure, hey, you had $5,000 in your bank and then you sent $5,000 to whoever's holding that earnest money. So we're going to verify that as well. And all of that's packaged up together to go back into underwriting for the very last time, because you've already done the front end underwrite, right? So that last underwrite is going to encompass all of those things. And then once it's done underwriting, then you're going to get what's called a clear to close or a full approval. So it's the exact same thing. So that full approval means that you are done on your part, and that the next thing that you're going to do is you're going to end up wiring the funds from the closing disclosure, the final closing disclosure that we receive and send to you. And you'll wire the funds the day before closing to be ready to get those keys the very next day in most cases. Just depends on what the timing looks like.
So it's not a simple process. And, I know that clients, buyers and sellers, when things are not going the way they want them to, one of the first people that they take their bow and arrow and they aim that arrow at is that lender. What's wrong with that lender? What are they doing? Why didn't they? Where are they? What are they? And it's because the absence of communication, lender and client, lender and the agents that are involved, both the agent representing the buyer and agent representing the home seller, keeping that dialogue going, because you're not trying to hide anything.
Right.
If anything, you're trying to get as much information out as possible to get people to take an action in a timely way so that you can go through the steps that you are mandated and required to do. And the interesting thing about the loan business, because real estate sales is regulated, but I want to tell you that the loan side of the business is highly regulated. And so you're not doing anything that skirts the regulations. You have to live within the rules.
100%.
Okay. But not everybody understands that. And so the level of communication, even if it's simple, say, hey, Ira, guess what? I don't have any more information from you today. The underwriter is still looking at your debt to income ratio. But the minute I have something, I'm going to give you a blast and we'll talk about it. But just want to, no information is just as good as a pile of information, because that's information, and that's so important. So let me take that and let me jump off the diving board here, deep into the pool, because it takes a lot of information and explanation and then action to initiate some of the programs that you have. And there's a couple of programs that I'm fascinated with and that I really like, because it fits two distinct sides of many of the buyers and many of the sellers, and particularly the home sellers that have a need to either move up to a larger home or sell their home and move down to a smaller home. It's that step between, I got to sell my house because I need money to go into assisted living. Going from a, 4-bedroom, 3-bath house with a basement to, I just need a ranch. 2 bedrooms, 2 baths, and the kids will come to see me whenever they want. There are programs that you have, and Brett started talking about them a bit, and there's 2 that are interest me, and I'd like you guys, if you could, to dig into those and anything else you think. One is the buy now, sell later program, and the other, particularly for home buyers who are older, who've been in a house for a really long time, and they've got either very little left on a mortgage or they've got all equity in a home. There's that equity loan where you can take the equity out of the house to go ahead and buy ahead. Can you guys both, jump into both of those programs, and from a seller's point of view, can convince me as the seller that those programs, as attractive as they look from the outside, really will help me to achieve my goal of getting from home A to home B. Why don't we start with buy now, sell later? Because that's a biggie.
Yeah. So with buy now, sell later, one of the issues that you run into as a home seller is, the timing. If you can't just go out and buy your new house in cash, and you can't carry 2 mortgages at the same time, which is where most people find themselves in, is they, only have enough room in their budget to carry 1 mortgage payment. So traditionally, what people have had to do is they've had to, get their home sold first. And then while that house is under contract or it's on the market, go out, start shopping for the new house. And then, number one, for the new house, if you say like, hey, I want to buy your house, but it's going to be contingent on me selling mine, it's a weak offer, because the home seller, or the house that you're wanting to buy, that seller has to feel confident, that you're going to be able to sell your old house in time, and then close on time for their house. And they may be contingent on buying their new house, and contingent on you buying their house from them. And it can create a domino effect. And so there's a lot of instability with that. The other thing is, you might be in a situation where, you have a lot of stuff, or you have kids that are in school, or you have animals, or, you need to put a fresh coat of paint. And if you have like young kids, you might be worried about, the walls getting scuffed up again, or, you just got a lot of furniture and you can't really stage or make the house look pretty to try to maximize your value in resale. There's a lot of reasons why, there can be a lot of hurdles when you think about, man, we really want to buy, but just the challenge of selling first, getting under contract on a new house, it's a lot of challenges. So we've tried to make that process easier for home sellers and home buyers that have a house to sell with our buy now, sell later program. So what we do at AnnieMac with our private equity is, we can pre-qualify you for the program. We're going to qualify your old home and make sure that it meets the equity requirements, make sure that it meets the condition requirements, location requirements to be eligible for the program. And then we're going to pre-qualify you, kind of do that platinum pre-approval, where we're going to gather all of your information up front. And then we're going to project into the future, what do we think that your old house would sell for? How much equity do you have available after paying off any mortgages? And how much money are you going to be able to transfer on that new house? And then as long as you meet the qualifications, then we can go ahead and approve you for the program. And then what that is you go home shopping for your new house first. And then when you find the house that you want to buy, we will actually step in and buy that house for you in cash, allowing you to move in immediately. And then after you move in, you're going to list your old house. You're going to move everything out, maybe, paint it, update it a little bit, get it ready to sell, make it look pretty to maximize your resale value, and hopefully help you sell it as quickly as possible now that you've moved out. But it just creates that convenience of, being able to buy first, sell later. And also it can help you, sell your old house for more money because you've been able to get everything moved out and make it a lot easier. And with that program, you're only having to, you don't have any payments out of pocket on the new house after you move in. So you just keep making your old mortgage payment until it sells. And then once you sell the old house, then we'll settle up with you on the back end. And basically you'll do your permanent financing after you sell your house. And then you'll take your net equity from the sale of the home and put that down on the new house. And then we'll transfer everything completely into your name. So it just makes the process, a lot less stressful, a lot more convenient, and it definitely creates a lot of solutions for people that, may be stressing out about, hey, we really need to do it. We just don't see, the path to get that done. So we have created a path for you to make that process easier.
I'm going to jump in here for just a second, because the critical thing that you said in the middle of all of that is that AnnieMac, through a sister company with AnnieMac, will step in and buy that new home for you for cash. Now, lenders make loans. They don't buy houses. But lenders that really know and understand the complexity of the marketplace, particularly with the growing number of people that have bought homes, that they bought houses when the, interest rates were 2 and 3%, and they've outgrown the homes. And, they bought a house, a 3-bedroom, 2-bath ranch on a slab when it was a single guy with a kitty cat. We had a past client just like that. He was what we call the balloon guy. He was a hot air balloonist. And then he got married. And oh my God, then they had twins. And then they had a third child. And now they've got 3 cats. And everything that they can't fit in the house is sitting in the garage. And they had to sell that smaller home and buy a house that fit, a much different kind of family. And so we had to really work to make sure that we had their house sold, but that we were working really hard to find them the house that they wanted to buy, so that we could literally close both closes on the same day. And so all the work to clean up the house and repaint and move all of the, boxes of stuff out of the garage, all had to be done ahead of time, versus this program. And that's a pretty amazing program. It takes a ton of pressure off of you, the home seller. Mm-hmm. And it really gives you a very clear idea of how the best use of your money is going to be to both buy that new home and sell that new home. But there's another program, and Brett or Jackson, I want you to talk a little bit about this, which is a program, and this is a program I think more often that would be tapped for people who they have no mortgage. So everything that they have in the house is all equity. And tends to be folks who are older, lived in a house for a good long time, they're downsizing, and they need to find another home that they can move into, because that's the more difficult part for them, is to really buy and adjust to this whole new environment. But they don't want to have to be back in having loans in order to do this. There's an equity program that AnnieMac has that really can help them to use their money as leverage to make that happen. Can you talk a little bit about how that would work?
Yeah, that's our cash bridge program. Do you want to cover that?
No, you got it.
Okay. Yeah. So part of that process, in the scenario that you're talking about, Ira, we have what's called a cash bridge program. So if somebody owns their current home free and clear, it's a big house, maybe they're on the opposite side of the story that you just said, and they need to downsize, maybe moving closer to grandkids, or, whatever the case might be. They own the house free and clear, or they owe very little on it. And so they want to get a house that's much more manageable, maybe smaller size, a 1-level ranch, no stairs. And they just want to pay for it outright. But the logistics are just difficult, or They'd be like, hey, I've got the money in the bank, we don't owe anything on this house. It might take a while to sell. And then they call their financial advisor and are like, hey, we want to liquidate money in our retirement account. And then like once we sell our house, we'll refund that money back into, our retirement or investment account. And, depending on their scenario, that could be a horrible, decision, because it could cost them, lots of money, in fees or other charges, taxes that they may have to incur if they do that. So we have a program called Cash Bridge. And what that allows us to do is, again, we qualify the borrower. We make sure, they have enough equity in the house that they're going to be selling, and they don't want a mortgage on the new house. AnnieMac has a program where we will step in and go ahead and buy the new house for them first, so they don't have to liquidate their savings. They don't have to liquidate their investments, their retirement account. We'll go ahead and buy the new house first, and then they don't have to make any payments on it actively while they're in. They just have like a rent that accrues. And then once they sell their old house, they can take their net proceeds and then use that to basically buy the house back from us. And then they just pay us back whatever rent accrued on the property during that time. And so that's a great program that makes it, much easier to transition into the new house. Makes it easier to sell the old house because they can move everything out of the property, stage it, make it look pretty, and they don't have to make their financial advisor or financial planner upset with them because they pulled way too much money out that they really couldn't afford, and they incurred some penalties, or it cost them some money that they could have kept otherwise.
Yeah. Steph, you and I were talking the other day, and we talk about this pretty regularly, about the changes in, particularly with first-time buyers and younger home buyers, their lack of complete knowledge of how to deal with money and finances.
Right. I mean, yeah, we see a lot of this now, and look, we've been in the business a really long time. So we've really seen the changes in the population, and, how you mentally prepare and what you know about when you decide it's time to buy a house, So we run across a lot of people nowadays who make a lot of money. They have a good job, but they spend every penny they make, or they have no credit, or they need down payment. They make $200,000 a year and they spend $225,000 a year. They have no savings and they want to buy a house and they need down payment assistance. That scenario never would have been in my realm of reality even 15 years ago, right? But we hear this all the time. So, like one of my agents said, yeah, they make $225 and they want to use down payment assistance. I'm like, what? So how do you deal with that? And how can you help people like that? Because there's a lot more of them out there now than there ever was.
Sure. I'll take this one, Brett. Let me make this really easy. Down payment assistance is there so that it supports people that are cash poor, so meaning that they don't have cash availability right now to put down on a home. So a down payment assistance program, some of them are grants, some of them are not grants, some of them have to be paid back. And what the purpose is to make sure that they have the down payment and that they can purchase a house without pulling a bunch of money out of their own money or a 401k or even their own checking and savings accounts. In the state of Georgia, where we're at, the biggest one that we see is Georgia Dream. And Georgia Dream, what most people don't realize is that Georgia Dream has to be paid back. So when you refinance or you sell that house, you're going to get a bill for $10,000 or $12,000, depending on which program you're in. Not a bill per se, but you're going to pay for that at closing. And sometimes that's a gotcha. So, there are some programs that I am, not a big fan of. And Georgia Dream does what it needs to do, but it's not always the best option for a buyer, right? So let me give you an example of what is a best option. So at AnnieMac, we actually have the ability to do an FHA loan that is a 100% loan. Okay, so it's two loans. The second mortgage is actually a 3.5% loan that gives you that down payment that you're looking for. And yes, we see it all the time where people don't have that 3.5% because they have those exact option or issues that you just pointed out, where hey, they're cash poor because of their own inconsistencies and misunderstandings of how money works. And remember, I have to tell my kids this all the time: money doesn't grow on trees. But if you,
Yeah.
and Dave Ramsey, to quote Dave Ramsey, he always says, hey, if you don't tell your money where to go, you'll wonder where it went, right?
Mhm.
So that's a great thing to remember. And I try to instill that on my kids, but I don't think they always listen either. But what else is new? But yeah, so the things like it might, if I'm looking at either doing DPA, which is down payment assistance, or an FHA 100% loan, I'm going FHA 100% all day long because it ends up being cheaper on our clients than doing the down payment assistance. And what most borrowers and almost no realtors realize is that all down payment assistance programs that are not internal, and very few companies have internal down payment assistance programs, there's a cost for those so that the mortgage company makes money. I'll give you an example. So on Georgia Dream, and I'm not trying to attack that one. I like Georgia Dream. It works for some people. For some people, it does not. But most mortgage companies have to charge 1.5 to 2 points just to make money on the loan. And by the time if you're getting $10 or $12,000 from Georgia Dream, it doesn't make sense financially to do it, because if the mortgage company is charging that 1.5 to 2%, you've blown half or more of that money, of that $10 or $12,000 from the word go. So I'd rather you do the FHA loan, which is the 100%, because it ends up being cheaper. You're not really borrowing, 10 or $12,000. You could be borrowing less to make that work.
So but there's a broad range of down payment assistance programs, and some of them are unique, and you have to run your loan through them. There's a
Sure.
loan that we
Genoa?
just became aware of. It's for nurses and medical people,
Okay.
and it's specifically for them. And we haven't really looked deeply into it, but a lot of those loans are really, in effect, second mortgages.
They're silent
So that
seconds.
even if they get that loan, that down payment assistance, they still need to come to you at AnnieMac to get that principal loan. So how do you integrate those two and make that work for folks without being too technical about it?
Yeah, gotcha. So, most of the down payment assistance programs, that second mortgage is a silent second, meaning that they don't make payments on it. Or there are some where you have to end up making payments for 5 years. And as long as you make them on time and including your first mortgage, then it's forgiven. It just depends, and let's speak to Genoa for just a second, because I know that that's going to come up, because that's a big one that we hear nationally. So Genoa, basically, the way it's built is that the 3.5% down payment is actually given out of the rate. So that money comes from the cost of the rate. So sometimes the rate ends up being a little bit higher, or a lot higher in some cases, than what someone would pay just to put down 3.5% on an
So,
FHA loan.
and by rate, you mean that the interest rate. So instead of it being, let's
Correct.
say, a 6.2% loan, it might be a 6.7% loan.
It could be 7.25.
Could be,
Let's be honest, because it just depends on where rates are and what the cost of the rate is. So they have to build that 3.5% into the rate to pull those monies out to be able to give to the borrower. And so you're just jacking up your first mortgage payment to do that.
So in other words, the buyer has to be both aware of and be capable of paying more money each month to manage the
Right.
interest on the principal of the loan, plus taxes and insurance, and mortgage insurance. So that impacts the overall price of the home. If you've got to pay $2,000 a month, as an example, with that second mortgage versus not necessarily having to have that second mortgage, and your monthly payment is $1,800 a month, it is easier for you to make those payments, and the money is, you can put more money into it. It goes towards principal as opposed to
Right.
it's, going to pay taxes, even though those taxes are tax deductible still. It's what you have to pay each month to make it happen. So there's really a choice, isn't there?
Yeah, true. And I think one of the important things that people miss is that when it affects your debt to income ratio, so that you end up affording less houses or less house in
Right.
that case. And, and that's, of course, most people want to go get the biggest, best thing that they can afford. Um, and that's okay. We totally understand that, but it being house poor doesn't help anybody. Right.
Mm-mm, mm-mm.
Yeah.
Yeah.
So to sort of put a wrapper around all of this, um, the lender, that's the company, okay, like AnnieMac, and the loan professionals that are part of that company, they need to not only have a good understanding of both the specifics that the company has and the broad marketplace, what loans are doing and how it's going, but also have to really know and understand how to pick and choose the kinds of programs that work for each specific financial situation that a buyer brings in. And you'll probably see a bunch of things that are similar, but yeah, no two people and no two loans are ever going to be precisely the same because of personal circumstances. So if you guys were going to summarize really what this loan process is about and how buyers and sellers should be thinking about the loan process, and also for sellers, and this is just a digression for a moment before we wrap up. One of the interesting things that we saw, and Stephanie and I have talked about this a bunch, and with our agents and with the agents at the brokerage, is how typically sellers are divorced from lenders unless they want to buy another house. As opposed to, you have programs that agents can use to market that home on behalf of the seller to make that house far more attractive than other people's homes that are similar to them in the same neighborhood. And there's one program that comes to mind, in addition to the 100% zero down programs and so on, which is your rate relief program. Now that's something that, especially if a seller is in a community where they're also competing with new home construction. Can you guys just give us a quick summary, because it's complex, but a quick summary of how cool that relief program can be as a marketing tool to be able to get buyers to be more interested in a home, and then come and sit and talk to you about, how that would work and how, sellers can use it as an advantage.
You want to cover that, Jackson, or you want me to?
Yeah, either way, you let me know. I can cover it.
Eeny, meeny, miny, mo.
Go ahead, Brett. You got it.
Yeah. So great question, Ira. So with rate relief, what we're doing with that is, like, to your point, a home seller may be competing with new construction down the street. And one of the things that home builders do is, a lot of times they will take some of the profits that they would be making off the sale, and they can contribute money toward the buyer's interest rate to give them a below market interest rate. And so if you're a home seller, you've only got one house to sell, you're putting it on the market, your house might be 5, 10, 15, 20 years old or older. And then, two doors down, you've got new construction that's being offered on the market. And so not only is it brand new, the builder is offering that property, at 4.99%, let's say, and, the market is at 6.5%. What chance do you have to sell your property or make it attractive or make it appealing to buyers out in the marketplace? You're just kind of SOL, and your house is going to be sitting there until, you know, the right buyer comes along, and it could cost you more money. So one of the things that AnnieMac's come up with is a rate relief program. And what this allows you to do is to list your house on the market the way a builder would. And so it does require, you know, some money that you would contribute, you know, in seller concessions toward the sale of your house. And pretty much any seller can do that. However, with rate relief, you can't always advertise a specific rate for the house. Just go out on the market and say, hey, you know, we'll give you a 2.99 or a 3.99 or 4.99 rate, because there's you have to be compliant. It has to be legal, because there's a big thing with truth in lending that you can't just go put any rate and advertise it, because if you advertise a rate, you have to advertise an APR. There are actually requirements that you have to put in place to make sure that you are legally compliant if you're advertising a below market or a specific rate on a property. And that's something that we have gone ahead and done. We've actually, with our legal department, we've gone to every multiple listing service across the United States, and we made sure, you know, that from a truth in lending side and then from the multiple listing service, that when home sellers partner with us, that what we'll do is we'll actually go ahead and lock a rate for them. So we actually create a loan file, lock a rate, and as long as they have funds that they can contribute toward a buyer's interest rate, we can either do a permanent or temporary rate buy down and legally advertise that rate on their house when it goes on the multiple listing service, which we call rate relief. And so when a shopper is out looking in the market, you know, they see 4 or 5 properties that they're interested in, but on your listing, we can actually advertise, hey, this house comes with this, you know, interest rate at, you know, 4.99 or 3.99 or whatever it is available with this house. And we've already gone through the process of making sure that it's legally compliant and that we can advertise that below market rate to help you attract more buyers and more interest, because, you know, you're basically doing what a builder is doing, and we're going to have your back, and we're going to make sure that you're doing that in a compliant way, and you know, help you get that additional interest from buyers in the marketplace, so that they can see, like, hey, you know, the reason I want to buy, you know, your house is because it comes with this interest rate. And most sellers that you're going to be competing against are not going to have the ability to do that. But if you partner with AnnieMac, we can definitely help you do that on your listing to help it sell more quickly.
And then we talk about this often, almost every single week, how it is so critical that when you make the decision to go ahead and buy or sell a home, that you need to have a group working with you that is a team. And the team has many components. And as you can see from a buy side, absolutely, the critical team player. He's the guy who can shoot that 3-point shot from mid-court and hit it 95% of the time. That's so important to have a lender as your key team member in order to make that transaction actually come to pass for buyers. But here with AnnieMac, not only do they have a focus on helping buyers to be able to buy homes, but they have a focus on helping sellers to sell homes. And that is not only unusual, it's literally completely unique. Fellas, if you were just going to do a little quick summary of why AnnieMac is a company with programs and attitude that, as a partner working with real estate agents and serving their clients, this is a place that everybody needs to explore when they're thinking about buying or selling a home. What's the key thing that makes AnnieMac totally cool and special, aside from the fact that they'll buy me ice cream sodas when I ask them for it?
Well, I work here, so that's super important. No, I'm just kidding. But
And that's number one. Okay.
so I will tell you, with 24 years of experience, I have seen a lot of mortgage companies that are fly by night. I've seen, a lot of mortgage companies that say they are going to do X, Y, Z, and they kind of use smoke and mirrors to make it work. One of the things that I can say about AnnieMac is that, number one, they care about the clients. Okay, so that's numero uno. That's numero uno for me as well. Is making sure that our client is taken care of and that they have a 5-star service throughout the process. Yes, we bring programs to the table that a lot of most mortgage companies in the United States do not have. Okay, they don't have the ability to have that. In fact, most of them, if they do have something similar, they're using somebody else's product. People are trying to copy us right now. If that tells you to the what extent AnnieMac is a player in the market. Most people haven't heard of this company and it has a really strange name, right? Like, who's Annie? I want to know who Annie is. I asked that question when they were recruiting me, like, who? I've never heard of this place before. But yeah, I think the other thing that I can say is that the people internally are amazing. They really work hard to benefit our client and take care of our realtors and make sure that, that we have a symbiotic relationship with our realtors and clients. Everybody's always happy. They're happy to do their job here because our company, AnnieMac, is built so that people want to come to work. And I'll tell you, other mortgage companies are not. And I know Brett can speak to this too, that you're just checking the boxes. But here, they wake up in the morning and we're ready to go. Brett, is there anything you want to interject here?
Yeah. So one of the things I would say, Jackson, is there's a saying that goes, price is what you pay, value is what you get. And so I would say when you're a consumer looking to go in the marketplace, most consumers, they just look at interest rate. What lender, what bank, what credit union has the low interest rate. So that's the price. And we have great rates, but the value of what do you get for that price? Because one component is just what you're going to be paying on the mortgage, but your financing is also the bridge. It's the door to help you get the house you want. Because you don't really want a mortgage, you want the house, and the mortgage is the bridge to help you get the house. So what we do is we bring more value to that process as a buyer than any other bank, credit union, or lender out there, because we can offer you the tools with our cash offer program, with our appraisal assurance program, with our buy now, sell later program. Because you might like us, we might be nice, you might give us a 5-star review, but at the end of the day, we're just a tool that you're using to get the house that you want. You want the house. So we're going to help you get the house. We're going to help you compete for it in a way that no other lender, no other bank can compare to. So if you want to make sure that you can secure that house, that you can get it under contract, you need a partner that's going to bring the value, that's going to bring the tools to help you get what you really want. And that's what we do for you.
Well said, both of you. Steph, any other questions about loans and how to work with two guys like Brett and Jackson? How to get them to get up in the morning and really want to come to work?
No. I just think that all of this stuff is just normal protocol for you guys. So you're spreading all this stuff out about all these programs. And it depending upon the personality of the person that you're talking to, if you're talking to some, an accountant type or an engineer type, they're like getting it all and they're writing it all down. It's all making sense. If you're talking to a high I, who's like super friendly, and numbers, or they're just going, it's like, whoa, what did this guy just say? Mm-hmm. So you guys have so much information that I think that it's really, and it sounds like, you do this, but it's really important to know your client and know how to work with your client so that your client really does understand all of these programs and gets the right program. because, typically, as a realtor, we have to talk to the person like their personality wants to be talked to. We are taught to figure out, okay, are you an I, an S, a D, or a C, right? So you don't want to talk to a D personality who is direct driven the same way you want to talk to an S personality who's like a teacher or a nurse that is nice and nurturing. You've got to figure that stuff out. And I think that this information has to be presented the same way. And it sounds like you do that because you have so much stuff that if you sat down with me when I'm a high I, and you didn't really super explain all this stuff, I'd be lost. I'd be in the fog. Like, okay, whatever. Just
Right.
give me what you think is the best thing and let's move on to the next step.
Exactly.
Critical. So, your home sold guaranteed realty, and AnnieMac Momentum Mortgage. We are a team together. Our role is to pull that team together that fits you when you're ready to buy or sell a home. All of the right services and all of the best people to help take each of those steps. And working with a lender, that's a big step. And so you'll want to be able to contact both Jackson and Brett. And we're going to have their information that you're going to be able to download in the information accompanying this podcast. But before we sign off, before I give you the great goodbye, Steph, can you give us
The
Just-
great goodbye.
the great goodbye? Just give us 2 minutes of if
right,
you're going to
quick.
pick your favorite things to go and play at this month.
All
What
right.
would those be?
So some of my favorites are the Marietta Greek Festival, the Atlanta Jazz Festival. That's going to be at Piedmont Park. That's Memorial Weekend. The Renaissance Festival. I always like going to that. And getting away, if you have 3 days and you haven't been to Blue Ridge or you haven't been to Helen, those are really quick places to get to and lots of fun. And Chattanooga is always great. Sea Rock City. I mean, there's all kinds of fun things to do in Chattanooga and the aquarium. So, make Memorial Day a little bit, take another day and check some of these things out. Or if you can't get away, stay in the city and, go eat some Greek food and go eat a turkey leg down in Fairburn at the Georgia Renaissance Festival.
Yeah. And if you're driving from Marietta and you end up in Chattanooga and you say, oh my God, this place is beautiful, I want to buy a second home, all you got to do is call Jackson and Brett and they can help you do it.
Exactly.
They're on top of it. So look, tough topic, great information. And I think most importantly, it's the people behind the information that are so important to you as a buyer and seller, which is why both Jackson and Brett are with us. And they'll come back and they will visit from time to time. And we'll talk about some specific things. And we'll talk about the way the marketplace is changing as it relates to money over time. But this is a really important topic. And so if you liked what you heard today on YouTube, go ahead and like us. And if this is the first time that you've visited with us, well, subscribe to us and subscribe to the channel. That way you can get all of the podcasts and you can get all of the short videos that'll give you lots of great information about not only what you need to do, but where to go to have fun. And we do that every single week. The fun part is...
Yes, I leave that to the high I personality.
That's right. Stephanie takes care of the fun part and I do the tough stuff.
I'm right there with you, Ira.
Yep. But I do want to thank you absolutely for spending time with us today. And again, we want to thank both Brett and Jackson for giving us a really, I think, important hour with some great information for you all. So Be sure to come back and visit with us next week. And when you do, hey, put some, give us some notes and information about which place you went to this past weekend to have a good old time, because we'd like to know where you're going to have fun. So until we see you again next week, I'm Ira Miskin, broker and team leader with Your Home Sold Guaranteed Realty, along with Stephanie Miskin, team leader, and with both Brett and Jackson with AnnieMac Home Mortgage. We wish you the best. Have a great week and a great weekend. See you again next week.
Yep. Have a good weekend.